Good afternoon, everybody. What's up? Should be live on YouTube and in the virtual trading floor. Good afternoon. Good seeing everybody. What's up? What's up? What's up? What's up, Eddie? What's up, Penny? Bandit, Rose, Mike Reed in the house. What's up, Oriel, Christian, Joanna, Mr. Park? What's up, Bill? What's up, Dave? Tate? Good to see you guys. Howdy. All right, let's hop in. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure, this is unchanged. I actually have a little bit of that Beyond Meat that I didn't add on here, which I can do super quick. Very small position. I was actually trying to liquidate my position into the close, and I got partialed, and I have like a very tiny little bit, so I'm still trying to get out of it. Which I probably will be out of it shortly, but got to keep the disclosure correct. Um, oh man, I'm more frustrated with today's trading session than I have been in a while, to be completely honest. Right now the SPYs are up 0.12%. The Qs are exactly flat green, and the IWM is down 1.5%. And that's really where my frustration comes in is that relative strength with the Nasdaq compared to the IWM. I went out last night reading it short, actually, which is, I've been super bullish this entire month. I just think that the market's gotten a little bit ahead of itself. I went out net short by a margin of almost 2 to 1 on my longs, my shorts versus my longs. So I'm almost double the amount of short exposure as I have long exposure on, though it's concentrated with the TQQQ ETF, the UPRO ETF, and a decent Tesla short. And the Tesla's my best name today, so I really can't complain about Tesla. My target on it when I got into it yesterday was 230. The low of the day today is 230.96. I had liquidated 90% of my position by the low there, so that was a really good one. It was just I was actually really confident, more confident coming into today after last night that unlike November 3rd here, that this time around the needed correction of our extension would be more through price than through time for the SPYs and the Qs. And then after hours yesterday, as soon as we saw Cisco get hit, we saw PanW get hit, the Qs instantly dropped by a buck or so after hours. I instantly felt vindicated with my idea. I was like, oh, this is gonna be great for me. Again, they're probably gonna frustrate a lot of people because they're gonna gap us down tomorrow, meaning this morning, and not let people get into those shorts and have the short be difficult because they'll gap us down. But I'm already pretty loaded up here to the short side and the SPYs and the Qs and this Tesla position. And I would describe the short position, even though I'm decently weighted on the short side compared to the long side here, as something that I'm really just looking to borrow. I'm just kind of borrowing the short to have that to hedge me out, but obviously more than hedge me out if I'm that short into what I think will be a price correction. But it'd be a trade that I would be rapidly covering into a down move where you would see pretty quickly that I would be back to market neutral, then net long, and then potentially all long, depending on how deep the price correction comes in. So I was feeling really excited about how I had positioned myself yesterday. This morning, when I woke up, we were gapping down, though it was not as much as I initially thought it would be. and then that unemployment number came out that ripped us up. And I'm managing these positions. I'm not just sitting short, T triple Q and U Pro. You can see. I'll even show my executions on this T triple Q real quick. I'm very actively trading this throughout the day. So even with T triple Q and U Pro both being positive today, I'm up money in both of them, but I'm up a very paltry number compared to some of the long swings I'm in, which I guess are a bit more correlated to the IWM. I mean, like just SoFi being one of the worst ones. SoFi down 8.5% today, or I still have a position in Chewy that more than negated yesterday and is down 5.5%. Or this like I can't complain about this. I crushed this name over the course of the last four trading sessions. I had loaded up at 2150 in the pre-market that day and have been sold all the way up through 30. So I'm significantly lighter now into this up move, and I did really well with it. But I still have a position there, and this thing's down 4.5%. So, or the Chinese names. I know this JD bounced back great off of its opening low, so it's another one that I can't complain too much about, considering what Alibaba did this morning with its earnings report, but still, closing down 2%. So, I still have a couple swings that close positive, or do I? I've got one long swing actually that's positive. It's not Bank of America. Bank of America is negative. It's this pen. So I don't know. For me, it was just a really frustrating trading session because I felt pretty confident in the price correction that was going to come in today. I felt vindicated by my thought process after hours yesterday when we saw the market begin to move lower on Cisco and Pen W. And then today's trading session, it was the same stuff. It was the same thing. And I especially didn't expect it because TLT was gapping up so big this morning. TLT's up 1.4%. The dollar was gapping down this morning. I guess it closed in the green. Um, but I especially thought with this TLT gapping up the way that it is, that the IWM, if anything, could show relative strength today. I thought that this IWM maybe could hold in, and maybe we see some further rotation actually out of some of these big cap tech stocks. So that couldn't have been further from the truth. Apple was just so strong in the beginning of the day, and I know that it it did eventually roll. Excuse me. Sorry. It did eventually roll over, but Apple's just super strong and positive all day. I mean, Microsoft off the open was absurd. I'm a super Microsoft bull. I'm a super Microsoft bull, and I'm in a position right now. Love the company. Um, but the Microsoft move today was just insane. Microsoft hasn't touched the 80 MA on the daily chart yet this month. That's insane. That's crazy. Amazon was the weak one, and look what Amazon did. This was actually my best like pure day trade of the day. We were buying some Amazon in the hole a little bit this morning. Some Amazon at 140. This thing was weak early on, and also huge turnaround, which further helped support the Qs. Netflix was strong, was up, was grinding higher all day today. Meta was one of the weaker ones off the open, but ended up grinding higher all day today and kind of closing green. Again, luckily, I guess Tesla had a little bit of bad news hit this morning, with I guess Biden trying to push the UAW to get involved with Toyota and Tesla that was negatively impacting this. So luckily, this is my only individual stock short, and it was the right one to be in, and I got great follow through with it. So that was able to pay me. But overall, just like the way the spies once again held up today on the back of just like a handful of stocks and the Qs, and that's where my short concentration is. And then some of the stocks that I'm in, a whole bunch of them being down anywhere from 8.5 to 4% was just you know, terribly frustrating intraday. It was almost. I mean, I still closed positive in my Q position, in my SPY position, in my Tesla position, in my pen position. Closed, positive on Snap as a day trade, on Amazon as a day trade. I lost some money in Beyond. I lost a couple dollars trying to scalp that LIFW when it woke up at one point. So it's not the end of the world, but it's almost the opposite of the other day when I was super pumped. It might even have been yesterday. I don't remember. It's all lost in my COVID brain fog. Where I think it might have been yesterday, where all of my shorts were in my favor and were green P&L for me, and every long I had except for SoFi was up and was also green for me. Today almost kind of felt like the opposite. So I have like pretty gross P&L today, nice and red, a nice big fat red number. And it's just frustrating because I thought I had myself positioned extremely well coming into today's trading session with what we saw initially after hours, and it just did not work out that way at all. Some of these names got absolutely toasted. The IWM, whoa, that's not a real daily candle. I don't know what's going on with my IWM candle right now on my chart. That's definitely not real. There we go. It's better. The IWM giving a pretty nasty day. Uh, why does it say down 5.5% on my level one right now? It's obviously not accurate. I think it closed down 1.5%. IWM being down 1.5%, and the spies and Qs they could hardly budge to the downside despite the extension, despite the Cisco earnings report. I know that was off of its lows a little bit. Despite the PanW earnings report, which I know was another one that was off its lows a little bit. These Qs just could not budge, and it just goes back to the exact same things that we're talking about. I am truly bullish on this market, even though I got myself net short as of yesterday. It's just purely something that I'm trying to rent as an extension trade right now, because the reasons why I'm trying to I want to be long, they persist, and they're the reasons why this market held up so well once again today after it held up so well yesterday, which is there is just an underlying bid to this market that we know needs to be there. Again, you can just keep quoting that number just from the CTAs that I think are set to buy like $7.5 billion worth of SPX per day this week in a flat tape, and that number probably increases in an up tape, and it's been an up tape. Or the fact that the buyback machine is in full swing here in the month of November. It's just creating this massive underlying bid that will help the market be able to snap back, or as our new buddy Dennis in the VTF likes to say, the kangaroo market. But even with that, you would think that the market could still trade down for a day, coming off the back of some weaker earnings reports. When you've got this level of extension, and it can't do it. The market can't go down. Individual stocks can. The IWM can. It can be relatively weak, but this market just can't seem to do it. So I don't know. For me overall today, I was very frustrated. It was a frustrating day. My day trading was okay. I made a couple dollars in Amazon. I made a couple dollars in Snap. I lost money on that Beyond Meat idea. We saw a headline that they're getting added into whatever that Costco like department store is. I already forget the name. I don't think we have them in New York. Sam's Club, I think that's what it's called. 27% short flip. They didn't squeeze it at all. So I tried that thing a little bit today. I lost a couple dollars. Not too bad. I tried to scalp at one point this LIFW when we saw the volume come in here. Um, Scalped it real quick, got some covers, and then got stopped out, but it got a little bit of slippage on the stop, so it turned out to not be a break-even trade. I finished down small on it just because of some slippage on some size on the scalp that I was in. So, yeah, the day trading was fine. It was neutral. It was just more the positions that I'm in and managing around those positions was difficult, because there were some names out there. If you look at some of these intraday charts, that just absolutely could not catch a bid like all day today. I mean, SoFi just heavy early momentum down. We saw bearish option flow kind of hitting into it all day. Or energy names were super nasty. I know they rolled up a little bit in the afternoon, but these energy names were just really gross. XLE closed down 2% today. Financials actually still close positive. Um, but yeah, that's pretty much where it's at. I don't really have anything else specific to go over, but I'm not in a rush. So if anybody has any questions about anything trading related, I'm happy to dive into those questions. So speak now or forever hold your peace. That's the expression. We got Gap out after hours. While you guys are thinking about any questions that you might have, Gap is trading up 8.5%. Wow. They crushed EPS. Comparable sales. Wow. Solid versus expectations. Old Navy is back, huh? I didn't even realize Old Navy was still a thing. Gross margin also solid beat. So we got Gap. Gap is back. Old Navy. I used to hate those Old Navy commercials. Anybody remembers them? And AMAT is the other one. The AMAT results look okay on the surface of things. I don't know what we're missing here, but stock is trading down nicely on it, down 7.5% or so at this point. From Rex, today I traded Google to the long side. Must be nice. At 950. Okay. Nice little break of this wedge to the upside. Google was relatively strong this morning. Yes, it was. It was relatively strong pre-market. We mentioned that in the morning meeting. When I saw the Qs are upticking at 9:45, I think that Google could give some follow through. I just don't think that Google can have too much upside as the market is very extended. That's my thought process too. Turns out I was wrong. Um, turns out sold everything in front of the 137 level. Okay, not bad. It's the high. It's the high. Uh, in this situation, knowing that Google is relatively strong, would you keep some even when the market and the stock are extended? For me, the answer to that is usually yes. Usually yes. Unless I've got so much long exposure already in my portfolio that I really don't want to add on any new swing longs. That happens sometimes because when I'm deciding if I'm keeping something overnight, I'm not just analyzing the trade, but I'm analyzing the trade within the context of all the other positions that I currently have open. But otherwise, yes. I always want to go for that kind of maximum reward. We know that the market is extended, but we also know that the market's been extremely strong. The stock has been very strong. So I don't dislike the idea of keeping a small position from a win-win situation and risking some of what you've made in order to potentially make more. So nice job on Google, good execution on it, good trade. What else? Yeah, Intel's getting ridiculously extended. Had a upgrade this morning through the roof. It's a big Intel move. Stock usually doesn't really trade like that. What else, guys? Anything else? You guys all have it all figured out? I know I don't. Does anyone know how long she is in San Francisco? I don't. I was under the assumption that he would leave pretty immediately after the Biden meeting, though. I feel like that's how it usually works, but I never actually saw that. Never actually seen any information on when he's leaving or not leaving. This guy blowing me up. Excuse me. From Keen. I think the obvious answer is to trade smaller share size. Any words of wisdom on how I can get used to trading stocks that have a wider spread like CrowdStrike or PanW? Yeah, smaller tier size is always a way to adjust to trading something that's a little bit different than you haven't traded before. I don't like stocks with wide spreads, personally. I generally avoid trading them. CrowdStrike, I don't think is too bad. PanW is not too bad, I don't think usually, but you're still looking at like, probably 25-cent spreads in this thing a lot of times. Um, but I mean, the honest truth of the matter is, for me, these stocks are outside of my sweet spot in terms of trading liquidity. I don't like the wide spreads. They can be very attractive to traders, but I like names that are liquid. I like names that are, 1 to 5 cent spreads, really at the most. Or if it's going to be a more expensive stock, like obviously Tesla, that I'm in is a little bit more expensive, but it traded 135 million shares today, so that one's, generally trading pretty tight as far as the spreads go, even though it's a little bit more expensive. But the truth of the matter is that I just generally don't like them. I don't trade them as well. Potential slippage on the entries or exits, or more difficulty getting the fills on limit orders, because of that spread. I have found that for myself personally, that I don't get the same degree of reward for risk when I'm trading names with wider spreads. I trade Amazon and Google all the time now. When they were four-figure stocks, when they were, $1,000 plus stocks, I almost never traded them. It was just too difficult. If you're wrong and the thing spreads against you, $1.50 or something on a earnings move, or even just in general, all of a sudden you can do some damage for yourself. My sweet spot is stocks between the prices of like 10 and 100, or you could say 20 and 150. Um, that trade usually like a minimum of 1 million shares a day, and but also move. Like I love, like a Palantir from a trading perspective. Um, it's a $20 stock, traded 50 million shares today, generally a 1 cent spread, but it also really moves. It really moves back and forth. So I can get a lot out of that. Or the symbol S has been I know it's been primarily range bound here for a while, but this is just like a perfect trading vehicle for me. Same deal. Sometimes you get 2 or 3 cent spreads in this thing a little bit, but it trades a lot. It moves really well. Like I just love how this thing trades, and it becomes very conducive to my P&L. So, when I see opportunities in like an Adobe on the daily chart, I'll be honest, I don't look at Adobe. I don't look at Adobe when I do my morning research, because I don't want to trade it. But sometimes somebody will, bring it up in the morning meeting and say, "Hey, can you take a look at this Adobe level?" Or, uh, I know Varun, when he's here, likes to ask me about this MDB all the time. I, I'm probably not going to be involved. It's got to be a trade that's like significantly compelling for me in order to be involved in something that's more expensive and more spray like that. I just don't trade them as well. So I hope that helps a little bit. From Dave. Over the past week, I have noticed that the correlation between UVixie up and SPY down is a lot looser than normal. Is that typical in uptrend? So I haven't really noticed that myself, but if you're noticing it, it's something that we should pay attention to. Curious to know what you mean by looser. So, like, most of the time when you've got, I don't know, UVixie trading up and the SPY trading down, it's not necessarily that, it's an inverse correlation. But sometimes that changes. There are definitely periods of time where you see market up, vol up. Um, so uh, and that's something to take notice of. Like, one of the things that we were taking notice of today, which also was adding to my conviction, honestly, on the price correction for the spies and Qs this time around, more so than the time correction, was the VIX VVIX divergence. So you pay attention to that. Or I really remember, it was such a good signal. It was such a clear, clean signal, back in, I know it was the month of September. I don't remember what year it was. I think it was right here. What year is this? 2021. This was an interesting time because we had multiple days in a row here. Um, yeah, so this ended up being one of the bear pullbacks, I guess, in the calendar year of 2021. But into the very end of August, I think it was this September. Oh no, it was this one. I got it wrong. It was this one. It was 2020. It was 2020. Um, yeah, this like almost parabolic move in the spies here at the end of this, if I remember correctly. Look at the Uvixi here in the end of August. Put in an absolute low and closed on highs on August 26th, and then went up every day the rest of the month. Look at what the spies did on August 26th. Spies closed on highs. Uvixi made a low but closed on highs, and then they went higher together for the next like 1, 2, 3, 4, 5 trading sessions. So we topped out on September 2nd, and look at the top. Look at this move in Uvixi here, September 2nd. Look at that move, pretty significant. Um, and that was the peak here for the market. So it moved up together, and that's something that you could pay attention to. I know Jem Carson, I'm butchering his last name, however he says it with that nice accent when he says his own name, has been looking for, even before this rally started, has been looking for this rally to potentially end with a market up vol up kind of dynamic. So I think that that's something to pay attention to as we continue to move higher, especially with the rate at which we've been moving higher. That at a certain point here, we might start to see something similar to what I just showed from 2020, where we get multiple days in a row of VIX up, market up. And I don't think that that can last when we start seeing that. It might last for a day, 2 days, 3 days, 4 days. The example I just showed looked like it was like 5 or 6 days. And that's the most extreme example that I actually ever really remember. But then I think it actually becomes a warning sign that the rally is long in the tooth. So might have something to do with it. Yeah. Also broadly, I'm not exactly reading all the comments you guys are making as they're being posted, but you do want to remember that the UVixi is a very faulty ETF. Um, just it decays at a insane rate. It's a garbage product. It's not even really good to look at UVixi to give you a proxy of the VIX unless you're just looking at very small time frames. Like on the 5 minute chart, okay, UVixi is moving down, VIX is moving down on the 5 minute chart. And that's generally the information that I want to know more than anything. So I appreciate the question there, Dave. I just want to read the response comments in here. Um, Seeing Bill say, if I had to speculate, I would look into seeing if what you're seeing happens around VIX expiration. Ah, that's another good point because UVixi is priced off of the futures. So maybe when that rolls, there's a byproduct you're noticing. Yeah, that's a great piece of information. Also, I forgot about the VIX expiration. Cool. All right. From Chris K, do we have any scanners or anything available to T3 traders? So I don't know which trading software that you're on, but most of the trading softwares have basket building ability and things like that you can do. They're relatively limited in terms of, ability and scope, but you can build out some nice watch lists for you there. And outside of that, it's just the VTF, which for me, that's everything I need. Pretty much everything I utilize for my own trading is a combination of my trading software and the virtual trading floor. The research we get in the morning, the real time news, the option flow, the data we get in here is key. There is also, I assume it's still there. I never use it. The Benzinga news functionality that the VTF comes with. So you can see like in the top middle of the VTF, it just says Benzinga. You can click on that. You can get a Benzinga news resource in there that T3 gets for its traders. But my opinion on it is it's not nearly as good as Pat is, and there's a lot of noise in it. So I don't use it when I have the VTF here and I have Pat. Um, but yeah, if you're on Lightspeed, there's definitely things that you can build out into Lightspeed that tell you, new high, new low filter is definitely a thing. Um, I used to have a watch list that I had built out in my Lightspeed that would tell me percentage volume of the day before. So, and what I would use that for would be if I saw like a stock at 10 a.m. that it's telling me that it's already traded 100% plus of the previous day's volume in the first 30 minutes. I know something's going on there and I type it up. So yeah, I would say play around with your light speed. It definitely has the ability to do new high, new low scanner for sure. I used to use trade ideas when I was just doing retail. I always watched the feed in the VTF, but just curious if we had tools available. Yeah, the VTF is number one, and I would also say, just explore your trading software in a little more detail. Cool. Scrolling through on the VTF to see if I'm missing anything. From Rich N and Pat's morning note, thanks to Pat for that. In addition to all his great content, is an overbought, oversold chart. If we are in an upper level consolidation, then how oversold must we get before the market's ready for the next wave or leg higher? Are you referring to the short-term tactical thing that Pat posts in there each day? Yeah, I'm a big fan of using that short-term tactical. Um, Based on how we closed the day before, that unwinds itself very quickly in time corrections. I couldn't tell you exactly how fast, but I think that from my experience, if let's say that last night we closed in the red, and today we're having a flat open, just to make it simple. I think if you get a flat open after it closes in the red, and then by noon, if we've gone sideways the whole morning, by noon you'll be out of the red enough in order for the market to actually be able to move into a grind higher situation, and then that's how we sometimes see the short-term tactical like close red multiple days in a row is that the first half of the day is a pullback or a consolidation that actually gets short-term tactical out of the red. And once it's out of the red, the continuation happens in the second half of the day. We close on highs, which gets it back into the red for the second day, and then you kind of rinse and repeat the second day. Which is why I always say that. And again, I'm just using on the red. The green is the opposite. That's why I always say that if short-term tactical is in the red, it doesn't mean to me short. It means to me don't buy, because we definitely get plenty of days where um, you consolidate for half a day, it satisfies that, and then we roll up into the close and we close in the red again. And I think it's prudent to say don't buy at that moment because you've got a bad risk reward to buy, but it doesn't necessarily mean that it's a short because you still can close higher the next day. You can close in the red for a second day in a row, especially if you've had some time and price correction there. Thanks for the question, Rich. From Rosalia, how should I trade a stock with an upgrade? For example, in the morning, I saw a price target for Intel was $50 from 37, and today it performed well. Does it always work that way? No, it does not always work that way. Definitely does not always work that way. Um, you trade a stock that got upgraded or downgraded, I think, in the same way that you would trade anything else. Meaning, how do we trade, right? We trade because we have technical setups in the marketplace. most of the time those technical setups in the marketplace are rendered through the daily chart. So you start with your daily chart analysis each day in your research process. And part of my process each morning, as I'm coming up with my list and everything that I post, is when Patrick posts all of the upgrades and downgrades for the day. I go through every single one of them and I type them up to see if there's a setup. So for me this morning, I typed up Intel because I saw it got upgraded, but there was no setup for me here. So it never made my list. It's not going to be something that I trade. I want to combine the upgrade or downgrade, which does not mean that the stock is going to go up or down. You definitely see stocks get upgraded and go down, stocks that get downgraded and go up, or they upgrade it, which means that they gap it up too big and then they sell it off throughout the trading session. For me, it's just like a piece of news basically that's putting the stock in play. And a stock that's in play can give me a wider range than it normally does. It can have higher volume than it normally does, higher volatility than it normally does. And all of that to me translates into potential trading opportunity. So, again, part of my research process every day, and I recommend this for everyone, is you type up every stock that gets posted in the VTF, every name that had earnings, every name that had news, every name that got upgraded or downgraded, and you look for trading setups in the daily chart that could be a trade for you, um, and then you potentially trade them when they trigger. For me, as like a rule, I don't like to trade day threes. There's no trade like there was a trade set up back here 2 days ago on the 14th. $39 is a breakout level. So if that morning the stock got upgraded, I would love it. I'd be like, okay, Intel got upgraded. 39 is a clear level. We can buy through $39. Or if it was set to open up at 39.25, I would say we could buy versus $39. And then it puts it in play as a trade for me. But what we see a lot of times from analysts, which makes a lot of their upgrades and downgrades for me useless, is performance chasing, is price chasing. Was it this morning that Roblox got upgraded? And then sold off all day. I think that was this morning also. I think Roblox got upgraded this morning. I think Dimitri was making fun of the upgrade because, again, like it's funny because I look at the upgrades and downgrades every day, and I trade a lot of the stocks that get upgraded and downgraded because it's exactly like I just said. It puts them in play. I have a tremendous amount of disdain for sell side analysts who are creating these price targets. These guys or gals, guys and gals who are sell side analysts who are making these price targets, as a general rule, are awful. They're just awful. But the reason that they're awful is because their incentives are misaligned. um, the incentive is to keep your job or to keep management at the company happy, even though there's supposed to be uh, whatever they call the information barriers these days. They used to call them Chinese walls back in the day on my Series 7, which I took in '08. They still called them that. Um, uh, so they're just so bad. So what you end up seeing all the time is price chasing. You see it all the time. Stock goes up a lot, and then all the analysts come out and upgrade. And it's like, okay, thanks. Stock goes down a lot, all the analysts come out and downgrade. And to me, I mean, it's just so useless. Um, but again, if it puts it in play with a level, I'm interested. I don't. For me, I don't care that Intel went from 41 to 43 quarter today. It's a huge move. You could have made money in it. I'm almost never going to trade this. It's a day three to the upside with no daily chart set up with a lot of extension. And if it wants to continue to rip higher because there's momentum, great. As far as I'm concerned, I missed the trade. The trade was at $39. I wasn't paying attention to it that day for whatever reason, but had I been paying attention to it, I could have bought this through 39, then it closed at highs at 39.50. I've got a good profit cushion. I swing a percentage of my position. I get a beautiful day two. Awesome. Day three, the morning comes around. I get lucky because one of these chasing sell side analysts comes in and upgrades it, and that enables the stock to even continue further, and I make even more money. That would be the only way that I would ever be able to take advantage of Intel in this circumstance. But great question. Great question. Mm. Awesome. Glad to hear that you're learning. I love to see it. Well, I'm not seeing any questions, I don't think, in the YouTube. Does anyone else have anything here in our VTF? All right. Well, I guess not. Um, yeah. Should we keep shorting tech? uh, I don't know. I don't like being short right now, to be honest. I'm only short because of the extension, and I'm managing my position. I was talking to Dimitri after hours yesterday about this. I'm managing my position versus the ADMA. So what I'm doing is each day that goes by, this ADMA and the SPYs or T Triple Q ETF, which is exactly what I'm trading, is moving up, which means that I'm actually liquidating some of my position basically for a loss at the end of each day to size back down because I'm managing my position versus the ADMA. I will be all out if I can get a move to the ADMA. So today, right in the close, I covered a whole bunch of shares at what is inherently a loss. Because this moving average continues to move higher, and my trade is very specific to the extension. I would rather be long than short this market still, but I've got to recognize, and I'm trying to recognize, or that this extension has gotten a little bit silly. So I am long, but I've been building into some of these shorts. I finally got filled in at beyond, so that can go off my position disclosure. Um, I'm getting filled on these shorts and building in and building out of them, and I'm trading them all day today, and I'm making good cash flow in them. But as the market continues to move higher, I'm bleeding out in them a little bit. I have a I've had a perfect record for almost 2 years in shorting the market whenever it's become $10 plus extended to the upside. And if I were closing out the position tomorrow, this would break that perfect record. I'm down net. I'm down net between the P&L that I've made in UPRO, T Triple Q, and TZA. I'm not going to include Tesla in that because Tesla's different um, at this point. But if you consider that I have been short T Triple Q since the third, starting in a small way. I covered almost all my position because we got so close to the ADMA here on November 9th. I did cover all of my UPRO there, but I didn't cover all my T Triple Q because it didn't quite get there. UPRO, I didn't reshort until we got $10 extended again, which wasn't until yesterday, I don't think. Maybe it was the day before in the afternoon. So you pro, I was able to make money in it pretty much every day down here, do really well, and then I made money in it every day up here, even with it closing positive. Today I'm up by a small amount in it. T Triple Q, at one point at this Thursday low at Friday morning when I covered all of it or almost all of it, it wasn't all of it, it was almost all of it. I was up by a good amount of P&L in that also, but I've given back everything that I've been back, everything that I was up in T Triple Q, plus some, plus everything that I made in UPRO, to the point where I'm now down net on all of these names, but it's actually by like a very small amount, relatively very small amount. Especially considering that I originally started this trade at $38 or so, under $38, and it's at 43. Um, I'm actually really happy with how I've managed that position to be down as little as I am. But we'll see. We'll see how this trade plays out. If the market continues this momentum, which is insane. I've never, I don't know if I've ever really seen. I mean, obviously I haven't seen because it's potentially breaking this track record of, 2 years of 100% profitability on this trade with the way that I've been trading it. If we continue upside momentum or just time correct, I might end up closing out down on this trade overall for the first time. But we'll see how it plays out. But that's my trade. That's it. I don't think I've been saying it all month. You don't want to be short this market right now. Um, I mean, we can even see it within this massive extension. There is just this most insane. underlying bid in this market that I've almost like ever seen. We know exactly because we had the data in our hand since the end of October. We know exactly what it is. We know where it's coming from, and we shouldn't be fighting it. We shouldn't be fighting it. I don't think I'm fighting it. Maybe like a little bit, but I really don't think I'm fighting it. Um, if I was fighting it, I would have a much bigger position actually, and I'd be in a lot more trouble. But again, what I keep doing is like I know that this ADMA and this T triple Q is probably going to gap up by another 30 cents or so tomorrow. So any stock that I currently have in my game plan that I would be covering between where the ADMA is right now at 40.95 and where it will be tomorrow at probably, 40.35. I took off all of that stock into the close, again, inherently for a loss. But I also will continue to add if we move higher as well, if that makes any sense. So it's making the position sizing on it manageable enough where I'm not getting really hurt here on that trade into this up move. I'm able to maintain this trade, which is a trade slash hedge at the same time. Um, and I can comfortably add when the market moves higher, take it off as it moves lower. Again, I kind of showed a little bit on just like what I'm kind of doing, and there's a lot of executions in here, so it's sloppy. But you can also broadly see that I'm generally, shorting some stock into a lot of these upticks, and I'm generally covering stock into a lot of these downticks and down moves. So this is helping me manage a whole bunch of P&L that I'm making and covering intraday, but at the same time, and here's probably the dot right here where you can see, I just like right into the close had to buy a whole bunch back because my target, which is just my target on the trade is just satisfaction of extension. I don't really want to be short the market. Um, my target on is just the satisfaction of that extension. So when the market becomes less extended because the moving average continues to move higher, I need to have a lesser position to be able to make up for it. But then that position can get heavier again as the market actually moves up and moves further away from the ADMA. And that's kind of how I'm managing it. But like I'm saying, it's just an extension hedge basically because I actually am starting to have some real fundamental concerns about this market for like the first time. That I had to some degree in 2022. I haven't really had it all for 2023, but and I've been talking about it here a little bit in the VTF. I'm starting to get concerned a little bit for almost the first time on a potentially an impending economic slowdown. The question that I'm asking myself though, one of the big questions that I'm asking myself is will a pending economic slowdown actually even really hurt stocks? Because these companies have had so long to prepare for this economic slowdown, and that's how the margins and everything have been staying so good. Um, but I'm starting to get a little bit worried that as we get into 2024, that could happen. And yes, the market's a forward-looking mechanism, so should be able to say that in a perfectly efficient market, which we know it's not an efficient market, that the market would already be sniffing out the slowdown in 2024 and beginning to price that into the market. But I don't think that is really how it works, to be honest. Um, what I've been seeing and what I've been learning over the course of the last couple years, and again, I'm still learning as a trader, is it seems to me like these flow of funds is the most important piece of information that's out there. Understanding that those CTAs needed to come in and buy, understanding that the buyback window was opening up in November, understanding, the option flow activity and its effect on the market. I could have a conversation with a bear at the end of October, a fundamental bear, and probably agree with every single point that person would make and say to that person at the same time, like I said to all you guys right at the very end of October, I am massively long right now because I think we're about to rip up. Um, but I am concerned that at a certain point when these flows end, which they will end, we at the same time begin to run into a period of more, macro deterioration that I think that the market itself is actually fairly priced right now. It's just a matter of, if profitability slows down, then, you can stay at the same PE multiples and have the market move down as well. So that's like becoming my concern into 2024. Um, we'll take that one step at a time. I don't love big forecasts. I like I have a pet peeve that we see at the end at the beginning of every single year or at the end of every year. We'll see it at the end of December, beginning of January this year, where all these people on CNBC give their end of the year target for the market. I mean, we already saw Goldman already do that. You have no idea what's going to happen over the course of the next year plus. You know, some sort of new COVID virus can happen. No one expected that, right? And look what happened with the market. We're still recovering from that environment. So I'm not a huge fan of the huge forecasts, but I see some shadows on the horizon potentially from an economics perspective. At the same time, I know what we've been talking about, which is that the CTAs have to buy $7 billion worth of SPX per day, and that Apple buyback machine is on. And am I gonna short because I think that we're going into a recession when I know that everybody needs to buy, and I knew that an up move in the market would create this crazy feedback cycle of buying, which is exactly what we're seeing. It's all been in the data that Pat provides to us in the morning note every day, which is why everyone needs to read that every day. It's like it's incredible information, and that's where we're at. So I don't remember what got me on that rant, but I appreciate whoever asked me whatever question I was going over there. Let me scroll up in the VTF and try to even figure out where I was. Sono on the daily. Oh, I don't know what just woke this up. Did that move that way today? Was Sono might have been earnings? I missed it. But I don't know why it's up 18% today. It's not really on my normal watch list. Scrolling through here, from Dave S. For this type of shorting that you're discussing, isn't this exact moment where you're exiting a bear market, the type of situation where the extension trade doesn't work? Um, all extended markets have to correct. It's like a rule of math. It's like a rule of nature. The first thing that you got to recognize is that an extended market can become even more extended, but all markets have to correct. All extension has to correct, and I find that to be especially true at an index level. Like the concept of extension leading to more extension, I think, is easier on the individual stock level because of individual stock news or whatever than it is on a full market level. And again, my trades here to the short side, I don't really care if they make me money. Sorry, excuse me. Still have this cough from COVID. I just can't kick it. Like, of course, obviously I want to make money in everything I put on, but they're more designed to protect me from the extension than anything else. And ideally, like my most ideal situation is that we get a price or time correction that enables me to fully exit the short position. The ADMA catches up, and then I get continuation, and I get that next move. That's what I want most ideally. But yeah, the market has to correct through price or time. I'll make money in either way. I'll make money in either way. It's just that we never fully corrected in the cues enough for me to get out of that position. So I held some all through this last leg of the up move, which has me down on it. But I would think that even if we were to just go sideways here for the next, several days, and the ADMA eventually catches up to price with a beautiful bull flag, that I'll probably end up closing out of my QQQ and SPY shorts at least break even in that situation. let alone if we actually got the pullback that I'm kind of hedged for. And if we just continue with the straight upside momentum, sure, I can finish down on it, but like I described, the way that I'm doing it is making it so that I, all things considered, really am not getting hurt here at all on those trades. Like again, right now I'm net down across the board in the month of November for the SPY, Q, IWM hedges that I put on as a whole. But it's like a pretty small number when you consider what the market's done over the course of this month, or even what the market's done considering from the point where I first started shorting them. So I'm frustrated today because of what I explained earlier in the beginning of the meeting. But given what the market's done, I couldn't be happier um, with how those positions are going. Yeah, I mean, Costco looks like it got hit on Walmart or something. That caused a big gap down and then price correction in the moving averages. But yeah, it always has that way. Do we discuss psychology topics here? For sure. All I need is someone to ask a question. Sometimes I'll just come up with it myself if I have a specific reason to, and I'll just dedicate a whole afternoon meeting to a certain trading or market psychology topic. More often, it stems from someone in the VTF for our Q&A portion asking a question, and then that turning into a 30-minute discussion on whatever the topic is of the question. So, in the afternoon meeting here, in this Q&A portion of the afternoon meeting, I say it a lot, so it's worth saying again because I feel like I still haven't gotten through to some of you guys. This is your opportunity as a trader to ask any trading related questions that might require some sort of a long format answer. And generally, unless I really need to be somewhere, I've got no problem being here for, a long time, answering every question that anyone has. So anyone, it could be about anything. It could be like what Rex said earlier, a specific question about a trade that he took, or it could be broader questions on trading psychology, risk management, game planning for reward maximization. Any questions that any trader has, this is your forum to ask them, and I will answer them to the best of my ability for the benefit of every trader here in the team. Question about odd lot violations. If I bought a stock under $100 and accidentally sold in 50 share increments, is that a violation? Yes. Yes, it's a violation. First time per quarter is a warning. No trading odd lots, unless the market itself partials you, in which case you can round out the odd lot by selling an odd lot. From Mike Reed, I meant to ask you, what do you mean when you say a flat tape? Um, just that the market's like unchanged on the day. We haven't gone up or down. Yeah, that it just means we're unch-ish. Marty Vic might be stupid. I can't somehow find any period in the past that has 14 straight days over 10% on SPY or Qs with no actual high or low form on the daily left with multiple gaps. This dumb thought seriously cost me these 2 weeks. I'm not sure I fully understand what you're saying. 14 straight days over 10%. That's where you're losing me. I don't know what you mean by over 10%. Um, yeah, the interesting thing about the market is that it's probabilities, right? But you get these like very low probability situations that happen all the time because there's so many different types of low probability situations that can exist in the market that some are almost bound to be happening at any given point in time, which is like a cool concept to kind of think about and keep in the back of your head. And you can always be wrong, and risk management is going to always be the name of this game. Risk management means more than anything. It really does. It's the most important part about trading. And for the most part, the month of November here has been straight up. We do have one higher low, higher high. which was the Thursday pullback that was immediately led to a new high the next day. The rally from the low on October 27th. Okay. Would I treat GE the same because of its extension? It's a question on YouTube. Yeah, so again, individual stocks. So you have this concept that a market or stock can remain irrational longer than you can remain solvent. And you could say that any market that's extended is irrational at that point in time, and that there's different degrees of irrationality that a market or a stock could have. It's easier for stocks to be irrational for longer than it is, I think, for an index. So yeah, the same thing definitely applies to GE, and then different stocks trade in different ways. Like it's much easier for like a growth stock, like a Zoom or something, to be able to be extended for longer periods of time, or for that extension to lead to even more and more and more and more extension because it's a growth stock or a low float stock or a high short float stock or whatever, than it is for an index or for like a consumer staple or a General Electric or something like that. Um, but yeah, I mean, this G is another one. Google, I pointed out earlier. No, it wasn't Google. Which one was it? There was one stock we looked at earlier. I thought it was a Fang name that it had. It was Microsoft. Microsoft hasn't touched the 80 MA on the daily chart this month, and it's Microsoft. It's a massive, massive company. This isn't Zoom. That's crazy. It's really wild, but it can happen. And GE's been in this steady up grind above that 80 MA on its daily chart also. I mean, look, this November has just been. I don't really remember a month ever like being this strong in such a short period of time. And that was another thing that we've spoken about recently. Like usually, and I think Dimitri posted chart maybe yesterday about how the market took the escalator down and the elevator up. Markets don't normally work that way. Usually it's the opposite. You'll see that the market grinded higher for 3 months, and then in 2 weeks, we erased 3 months worth of work by selling off. Usually, sell periods are faster than buy periods. That's kind of a general rule. But this has been the opposite. We took 3 months of selling to get the spies down to 410, and it's taken a couple of weeks of buying to almost get us all the way back up. For the Qs, it is all the way back up. The Qs didn't pull back as much as the spies did. For the IWM, it's nowhere close to being all the way back up. So, and there's other charts that I know are making the rounds right now that are showing like the outperformance in these FANG type names right now is like bigger than any other time in history, which is really saying something because I've seen some periods over the years of very serious outperformance on some of those big stocks. Cool. All right. I know I said I'm happy to answer questions all night, and I am. I do have to meet somebody for a drink in a little bit. So unless anybody has a question, I am going to wrap things up. So have a wonderful night, everybody. Good afternoon meeting today. Questions are always great. Please bring them to each afternoon meeting. It's how we will all improve as a team, and that's what we want. So thanks again. Have a great night. See you all then.